So I know many of you maybe have not gotten into this yet, and this may be something completely different. The 12-month bank statement loan is a mortgage specifically made for this self-employed borrower. And before we get into all the particulars that you would find under document 5435, I want to just delve a little bit into the theory of bank statement documentation and lending. The program offers alternative income documentation solutions for the self-employed borrower. The income documentation requirements are 12 months personal or business bank statements, which are utilized for the income qualifications. Bank statements should be most recent available time of application, no longer than 45 days old. Transaction history printouts are generally not accepted. Multiple bank accounts may be used. However, more than 3 separate business accounts must use the personal bank statement option. The second thing that must be supplied on every loan is the business narrative. The self-employed borrower must provide a business narrative, which includes detail related regarding the size, scope, and operation of the business. Now, this would be key once we get into debt to income calculation methods from a bank statement alone. If you want to drive it down to the lower 20-15% options that are available. There is a few questions that the business bank statements narrative will ask you. Find it under the seller's guide products, go to the non-conforming products. But it's just asking some general questions. How long has the borrower been in business? Is the sole practitioner? What percent of the business does the borrower own, which must be 25%? Take some time and actually work through those factors. There is a requirement that there's a 2-year business history. Ownership percentage must be at least more than 25%. 1099 considered self-employed on the bank statements loan. And 1099s must be accompanied with bank statements. So when we look at personal bank statements, it's pretty simple. The way I would qualify it quickly before I get into the nitty-gritty and making sure that everything is determined to be from a business source is I just get their latest 12 bank statements, and from there validate the deposits and just count up every month deposits, and that is going to be their income versus the debt situation that they have. When you're talking business bank statements, right off the top, we want to be taking 50% for the expense factor. Any loan greater than 85 LTV is definitely going to require that we do 50% expense factor. But if you're in a no expense or low expense type business, we can go to a 20% expense factor if we believe your business narrative was explanative on that point. When we reduce to 20%, it doesn't need a CPA letter just yet, but the max LTV is 85, sole owner of the biz, low to no expenses in the business, like a realtor that's really doesn't even have rent or overhead. Now, a second option when we go into the business bank statement situation, option 2, is to get a tax professional, CPA, somebody that's validated as a professional for this guy. You can't be self-filing and then have some other CPA write a letter. At a max of 80 LTV, we would lower it to 15% if we agreed with the CPA letter that is indicating that it is a low cost and why we should only hold them at a 15% floor. Again, 20% is an availability with those factors. But the typical, without getting into CPA letters or any fancy stuff, is 50% expense factor. And that can be done with any loan over 85. It must be done that way. So ineligible for this. Note, self-employed borrowers who have filed their own tax returns are not eligible. I mentioned, gotta have an accountant. So file your own taxes. No passive income such as rental properties. No borrowers whose business is asset speculation, fix, flip investors, day traders, crypto cash kings. No exceptions to the published guidelines, by the way. So if you can't find it in print, which the easy way to do that is under our seller's guide, going to the link and utilizing the rule sets. Debt to income ratios, Flagstar TPO for non-QM. After determining income, find the ratios required per product. So we've talked a lot about alternative methods of coming up with income. By the way, when you register a bank statement loan, of course, you're going to register it as 12 months is the documentation type in the registration screen. But a few things to think about. There's some max DTIs. All right, so let's not get too lost on the conversations. We are right now highlighting the Advantage product, which with bank statement loans, 45 is the max back end. 50% is allowed if you're under 85. Now the Advantage, which was the roughest credit, getting restarted in life but have good assets on hand, 4 years from bankruptcy, long as the foreclosure is completed and no 90 days in the last year, that's the Advantage. It requires a 55 if you're over 680, a 50 if you're on. All right, so the point is every one of them has a little bit different. The Advantage Plus, the 7-year asset depletion calculation, or 1-year tax returns for 1099s and self-employed is a 50 back in up to 55 can be allowed with a minimum of a 700 FICO, max LTV 80, primaries only, no first-time home buyers, and 1.5 times residual income met. DTI over 45. Each and every one of these programs has a requirement. So this is non-QM. So if you're over the 45, we still want to do a residual income worksheet, which asks a few questions about residual income. You scratch in the facts about your loan. Of course, if you're talking a bank statement loan, you're probably not seeing any of these factors, right? We're aware of that. So we've got a few links here for what the underwriters actually do to go and, like, for an income range or a field, what kind of deductions would happen. Any one of these is a useful resource for you to have an idea that you're going to pass the residual income that would be required on the loan. As always, guys, it's great to hang out with you and talk a little bit about the depth of product at Flagstar. We think these are some great products that are going to help you navigate the challenging market that we're in. Take a deeper look and learn more to do more. Thank you for your business. Appreciate it.